right, what's going on, everybody? We're back again. Week, I don't even know, 59, something like that. 57, 52, I don't know. We've been doing this a little bit, so what's going on, everybody? Chris Franks from TexasWest Capital. I've got Andrew, who thinks he is the beard in Beards and Bitcoin, and we've got the CEO of Tillman Holloway, Mr. Tillman Holloway, here as well.
AKA the Bitcoin enthusiast. Don't forget.
No, that was Bitcoin enthusiast was last week. You're not.
Well, I know, but it carries forward. I don't have to have a title on there every week.
You do. How do people know if you don't have a title?
Listen, I'm assuming that that most of the people that tune into this show already know who I am. So it's not like we're casting bread onto the ocean here, Chris. Okay.
Well, we could be. Then where would you be, Mr. CEO?
Well, listen, don't criticize the beards in Bitcoin. He is the Sultan in swinging. He's all sorts of stuff. So the title.
You know what I am. Yeah, I'm going to tell you who I am. I am the most interesting man in the world. That's who I am. I will gladly grab that title. And I will swap stories with just about anybody. Okay.
If you ain't got one, you make one up.
Go ahead and claim that right here on this show.
Well, we definitely have fun here because life's too short and Bitcoin is fun. Am I right?
Indeed.
Yeah.
The Bitcoin enthusiast, you weren't really enthusiastic. I just gotta take a moment to point this out, okay?
No, of course. I mean, we're at all-time highs. We're obviously the cracking at the next leg up, and if I had to hot take, price predictions, I think we'll go 132 to 137, hang out there for a while, and then probably retrace down into the 20s again and then go back. It's the same old, I think. Until proven wrong, we've seen like 7 of these in a row of $10,000+ pumps. And what's interesting is like a $10,000 pump is relatively smaller each time.
Yeah.
So it becomes easier and easier to achieve. So, $10,000 swings, if they happened sequentially starting at 75,000, I think the probability is higher now that pattern continues. So that's my hot take, 2 cents.
Okay, well, I'll take it as a minimum. I'll take that. Yeah. We'll keep this going up, right?
The underlying narrative, at least for me in the last 48 hours, is this ongoing race associated with stable coins, and every let's just call it tech company that has anything to do with payments is now coming up with their own version of a layer 1 stable type of coin. And where and how does that settle out? But what happens there is just, for all intents and purposes, over the next 6 to 12 months, you're just onboarding an enormous amount of wallets, an enormous amount of users, an enormous amount of people that now have access just to crypto in general, right?
Yeah.
And that is, along with all of the other narratives, is just so extremely bullish. I keep using the high floor, high ceiling moniker because that's just the case. It's that the price action itself is proving to be that. We're beyond 30 days now where we've been above 110K. On Bitcoin, hasn't gone below that. We're beyond 90 days. We're closing in on 100 days where we've been above 100K on Bitcoin. Again, without any meaningful pullbacks, closing at those levels and above those levels for those periods of time. Again, that's fairly unprecedented in terms of different levels that and the lack of volatility, let's call it, associated with Bitcoin. It hasn't been that way. It hasn't acted that way for its entirety.
I couldn't agree more. And I think that I like to look back historically and try to find technology that has had the same disruption capabilities as what I'm betting on currently. And if you look at the original peer-to-peer streaming services that got shut down. You know, the original.
We didn't use those, did we? No.
No. We never used those. I do not have CDs with thousands of songs burned onto them.
From LimeWire using AOL dial-up.
Well, in Jester Dormitory with like the first T1 internet cable that it was like that was our generation, right? And so we got to see this technology that literally was disrupting one of the biggest industries, the music industry, the movie industry, Hollywood. Like the cat was out of the bag. You couldn't protect your rights because it was so disruptive. So you look at the adoption curve of that type of technology. Well, it's a hodgepodge. There were companies that, like Napster, that started out doing it the wrong way, but they finally went to a subscription model, and I think they got bought. But the evolution of the industry really at the end of the day got gobbled up by the legacy companies, Apple Music, YouTube Music, Netflix, all of these, mega backed, Wall Street backed companies are the ones that really took over the technology and took it to its heights of adoption. I see the same thing happening here that happened there. It's like they desperately didn't want this to happen, but now that they realize they can't keep it from happening, they're going to take the charge over and they're going to control it with the liquidity that they can manufacture. And now it's just a matter of time before we start seeing legacy companies either acquiring and or starting their own layer one coins. We've said it for years, like the novelty of what XRP can do. What keeps somebody from just taking the open source software and creating it within your Disney ecosystem and using it for all your payment? Like, there's nothing that keeps those types of industry captains from taking this technology and making it their own. And I think that's going to be the story of how this market evolves. If you look at, I think the biggest change that you're going to see as an indicator of what we're talking about is the top 100 crypto list. I think it's been dominated by a bunch of coins that you don't even know what they're doing. Highly speculative, no real world value, no utility. I think that list is going to start having major brand names on it, like Disney Coin, and you're going to see the top 10 start to evolve based upon depth of liquidity and true utility inside the ecosystem that it's serving. Yeah. And I think that's the major flesh out that's left to really materialize.
Well, one of the things,
and I believe you're big.
That go ahead. That we don't realize, associated with the way that tech evolves and the way that disruption changes, right? So you had the Napsters of the world in the late 90s, early 2000s, that
LimeWire
effectively outlawed, right? But the next thing that happened was iTunes, right? It wasn't even Apple Music, it was iTunes. And then iTunes had a 5 to 7 year period where it dominated. And then there was another shift, and that shift became Spotify, right? And Apple Music and Pandora or whatever it was.
Well,
right?
Andrew, let me interrupt you and break it down one more piece. The reason why Apple dominated is because they figured out compression more than anyone else. It all became about download speeds at that point.
Sure.
And they were the first ones that cracked the code of where when you pushed it, you were waiting a minute tops to get the song downloaded. Whereas everything else, depending upon network traffic, you were just at the mercy of slow downloads.
And there was also a monster at the wheel at Apple that went to the music industry and said, this is going to happen one way or another. You can work with me or I can destroy you and
correct
do anything. And so again, continued evolution, but that wasn't the end of the evolution of that space. It evolved again and again, and now Spotify dominates the space. So that's going to happen in crypto, right? That there's no doubt that that's going to happen in crypto. And where are we going to be in 3 to 5 years? Bitcoin is going to still be the king, but to your point, Tillman, what do the next 20 top 10 tokens look like? Very, very different than where we are today. Some of them will remain no different than, the dot-com bubble. But there are now, massive, massive companies that are, $4 trillion companies like NVIDIA, which in 2000, 2001, did they exist? Were they certainly nobody heard about them, knew about them, nothing was happening. They weren't a $4 trillion company back then, that's for sure.
Well, and look at them now in comparison. I want you to look at like the CEO status of even Ethereum's quote CEO Vitalik, right? Or go to ADA. I mean, you got some real whack jobs out there that are quote at the helm of these ships. If you have the choice of betting on a protocol that's been around for 7 years and done nothing in terms of real world adoption, but speculatively make millions of dollars for people based upon when they got in, versus the exact same technology being adopted by a Fortune 100 company that's implementing it inside of their industry as a competitive advantage. Like which token do you want to own? It's easy for me to see. So it's now going to be like the segregation wall is dropping, and you're going to be judged on utility. You're going to be judged on integration value. You're going to be judged on market demand and customers that adoption curves, like all of these things. And there's not going to be any of these projects that are going to get any attention based upon speculative. We're going to think we're going to build this in the future. That's not going to. That machine's dead. That's not flying anymore.
Obviously, the narrative, in the last cycle had much to do with FTX and Sam Bankman-Fried, on the cover of magazines. Is FTX the next, JP Morgan or the next Goldman Sachs? We're much, much closer to that, quote unquote flippening or process with Coinbase. People, whatever your thoughts are around Coinbase, customer service in crypto Twitter, Coinbase is, gets negative commentary all the time.
Very.
But at the same time, they still are a massive, massive, massive behemoth and the biggest threat to traditional finance coming out of crypto, like without question.
Yeah.
But they walk like a duck, quack like a duck. I mean, they are Wall Street. That's the reason why they are who they are. And if you look at the top firms, they all look the same, right? It is the same recipe of highly qualified Wall Street banking minded people that are pushing integration at the fabric level, not just, and so Brian Armstrong, he deserves a seat at the table, right? I would argue, like, I would want him captaining the helm of my ship from an investment perspective. But there's not that many of them in our space. There's a lot more of them in the traditional finance spaces, I guess, the point. Robinhood is a good example of kind of a crossover. Look at, what are you, if Robinhood had a token that you could invest in by buying it, and it had some utility within Robinhood's ecosystem, you're telling me that's not going to replace Dogecoin on the top 20 list? Or, I just have a hard time believing.
How dare you disparage the wonderful name of Doge?
Listen, I'm picking on Doge because it's the king. It's the king of memes. But that liquidity wants yield. It's not doing anything. And Robinhood has real fees that it charges that can be recognized as yield in the form of token minting and or inflation, our distribution. So it just has an advantage, Chris. You can't. One is full circle banking services, and one is you're a part of a community that makes you feel good. I think
we all love to feel good, man. Come on, that's all we care about.
Don't
feelings.
Mix that with your money. There's plenty of feel good frisbee golf groups that you can join, Chris. Go get your steps in and join a community. So there you go.
I can honestly say I've never played frisbee golf, but FiboSwanny's in the audience here, and he's an avid frisbee golfer. So
Well, I've played it a few times. It's very fun. You do get a good deal of exercise, and it's better. I like it a lot. But if you play with somebody that really knows how to play, they humble you really quick. These guys they're insane.
I've seen videos. So I'll do that.
So the point I was trying to make with Coinbase in terms of some of the negativity, there's been ongoing negativity associated with Goldman Sachs for decades. Doesn't change the fact that Goldman Sachs still sits on the perch that it sits on.
That's a great point.
And same thing with Coinbase. It's going to continue to sit on the perch that it currently occupies. And it does way more things than Goldman Sachs does. And I will continue to be fascinated. Where do these entities go that are an all-in-one, wrapped business that is an exchange, is a clearinghouse, is a marketing department, is a layer one stable. It's all of those things all in one entity, when traditional finance has purposely kept all those things siloed in different companies and different ways to make money. It's fascinating. Do we find ourselves where, because, most people don't know this. In traditional finance, you've got the NASDAQ, you got the NYSE, you got the Deutsche Börse, you've got a bunch of exchanges across the globe. But really, there's only two entities that meaningfully exist when it comes to, the exchanges. NASDAQ is by itself, and then Intercontinental Exchange, so ICE, owns all the rest of them.
Yep.
All the rest of them across the globe, other than in China and the UAE. So, point being is it's very difficult to make money as just an exchange in traditional finance. The margins are razor thin. It might as well be running a grocery store. That's not the case in crypto. So is there a world where the NASDAQ is doing deals with some crypto exchanges?
Well, but Andrew, think about it. I think the key is in the product that you're able to get your hands on and essentially become the market maker in, right? Because in the good old days, the way that the banks made the most amount of money is by issuing IPOs. Like they were the bank for the injection of liquidity for the public markets, and that is why they were able to become concentrated wealth machines, because they were the exclusive provider for some of those offerings. I think we've seen that in the crypto space through the ICO craze that we saw. It was like, why did you go with a certain exchange? Well, because they were selling a certain coin. That was the only reason. And so, I think you're spot on. And I think but the question is what unique products are now going to be engineered based upon all the connectivity of the markets?
Well, we're seeing it happen right now. So tokenized real world assets, tokenized equities are happening on Kraken. They're happening on Gemini. Eventually they'll happen on Coinbase. And so that's my question. Because that's going to happen across all markets eventually. So what are the transactions going to be exchange to exchange, right? Or is there going to be entities that buy these two exchanges and merge them with these other exchanges? At some point, it's all got to interconnect, and that only happens via mergers and acquisitions. So it is, very, very interesting to me that a Gemini over in Europe is pushing forward with tokenized equities. Kraken here in the United States, tokenized equities. Robinhood, tokenized equities. They're getting ahead of, again, the traditional financial institutions, but they'll get there. And what happens, is there a meaningful tie-up in some way? We're seeing JP Morgan nibble around the edges with Coinbase and, a credit card and a wallet and some other thing. We'll see, but at some point there's a colliding that's going to happen, and it'll happen swiftly.
So do you think that M&A activity starts happening, toward the end of this current cycle?
It already has happened. It's already started.
Well, we got a few, but we're talking about like everybody kind of finally getting on. You see multiples like really kind of popping out there.
Yeah, I think so. Something I hadn't looked in a long time, like what is BlackRock's stock at? Well, I remember when BlackRock first went public, and it basically did nothing as a stock for the better part of 4 to 6 years, maybe even 8 years. Well, now it's like at $1,000 a share. Like that's way beyond the last time I looked at it. So yeah, there's going to be, I think that the M&A activity really begins to percolate in Q1 of 2026. And real action happens in Q2. And then, of course, we'll go into sell in May and go away period, which is about to end, by the way, in this year. And then, end of Q3 and Q4 of next year, we'll see additional, big time action. And again, Bullish is about to go public. They're tightening up their IPO, crypto exchange backed by Peter Thiel. They want a $5 billion, starting point when they go public. So that's about to happen here in the next few weeks. Gemini will do the same. And then there will be others that happen through the end of the year. Let's call it 5 to 7 in total. And once you're in that space, now you're having conversations not based on just pure cash deals, but now you're swapping. These are equity swapping deals. Well, you get 70% of our stuff and we take 30% of yours, but we now own blah, blah, blah. So it's a much easier transaction when you're quote unquote playing with funny money, as opposed to JP Morgan's got to come up with $107 billion to buy Coinbase. They're not going to do that, right? So
you're taking brand value and injecting it into a new vehicle, and then you're doing a swap with that. I think it's a very easy to understand, especially if that new coin has some utility within the ecosystem. The fascinating thing about what you just said is, does that become more attractive than the equity play on the company? And how does that eventually merge 20 years down the road where, does it kill equities eventually? Will this eventually become the form of equity in a singular fashion where the equity of your share is actually tied to the utility of the token that's held? Like that is a powerful synergy that, if done correctly, you could see absolute utility at a fundamental level against the value of the commerce that company possesses, not only now but in the future, and then extrapolated as a multiplier in their quote token price. I mean, that's a pretty fascinating thing to think about, especially when you see this kind of beginning trend of layer one institutional coins being launched.
Well, we'll see if we get there, but as it stands right now, the trend is for crypto companies to go public and to raise, equity-based funds. It's interesting that they've decided to go that direction now that the road has been cleared. Like, Gemini could offer a Gemini token and it's going to be legit, right? Like Kraken could offer just a Kraken token and raise, I don't know, $10 billion, whatever they decided, really. Just, hey, we're going to raise $50 billion and here's our token. Click, now you own some, right? Yeah. Obviously easier and a significantly different process than the process of going public and quote unquote the scrutiny that comes with that. So one has to wonder, why are they going about it this way versus the rails that quote unquote they kind of started with and built themselves? That's an interesting question, right?
Well, it creates micro speculation opportunities because a company like Disney has so many different revenue channels that you could launch tokens against each one, and you could play different avenues within their ecosystem from a capital perspective, instead of being limited to just owning the overall potential of the enterprise and the shares that you would possess. You could essentially, I could envision, this is just off the top of my head, but let's just say, as Disney, there's a absolute maximum number of guests that you can have in your park every year. That is a physical maximum. Mm-hmm. Well, if you issued a token for that physical theoretical maximum, and you provided those tokens in a pre-sale type of an event before any given year, imagine how much money those tokens would go for. And imagine the secondary market that would be created as it pertains to speculative investment in those tokens and the demand for park activity that given year. And imagine from a Disney perspective, then you would have people, you would have people that now have a permanent badge of honor that you were one of the people that got to go in 2013, that's or 2027 at this, and it now is a part of, like, it's a permanent commemorative Disney, merchandise for me. and
Sure.
and like that would make the ticket prices go exponentially higher, because now it's this global badge of honor that the richest people in the world seek as a status symbol as much as it is any actually going to the park.
So
As to exchanges, I'm reminded of when Bitfinex went through something. They had a hack or whatever it was, or some on-chain sleuth said, "Oh, they don't have as much capital as they should." Whatever surrounded that 4 or 5 years ago, whatever happened, they literally did a token offering in about 3 days, and I think they raised, I don't know what the number was, but it was billions. They
Yeah.
raised billions of dollars. And I just looked it up. Their Leo token now is worth $9 billion, fully diluted. And it it's gone up over the past, several years from $1, $2, $3 to $9 a quote unquote share or a token. So I would love to at some point have a meaningful conversation like this where what are the upside positives associated with traditional markets, equity, IPO versus launching a token. Now my guess is that on the equity side is you're now plugging into the much larger traditional. You're a player now. You have a ticket to the banking cabal and the like. Whereas
Well, you just said the word. It's
Mhm.
the banks.
Yeah,
That's
yeah.
the difference. That's the only difference. It's the amount of debt that you can raise on the back of shares. It's the whole,
Yeah.
it's the suite of tools
That's it.
that the
Right.
bank comes to you with and goes, "Oh, now that you're at the table, you have all this incredible access to things that no one else gets."
Right. Like, there aren't meaningful structures right now to borrow. If you're worth, $5 billion in Bitcoin, there are plenty of folks that actually are in that position. You can't go to JP Morgan and say, "You know what? I want you to loan me $1 billion based on the Bitcoin that I have." That doesn't happen. But if you've got $5 billion worth of a company stock that you're the co-founder of, or the founder, or the CEO, or whatever, they absolutely will loan you $1 billion based on
For
the
free.
that you hold.
For
Yeah.
with no interest, for
Right.
equities, for more shares. And you just, because you get to print shares out of infinity, you can
Yeah.
just print more shares and hand it to the bank, and then they give you a chunk of cash or a no interest loan for there's all
Yeah.
sorts of fun ways, but it's all the banks. That's
Yeah.
what's the
So I
difference.
answered my own
let's
question.
You did.
Why do you do that? Right?
let's go back.
I think about the Winklevoss twins, right? The Winklevoss twins are worth whatever it is, $3 billion a piece of Bitcoin, maybe $6 billion a piece.
Dude, I think it's up to 8 a piece.
Well,
I think they're up.
whatever it is, they're probably going to be worth half or more of that when they take Gemini public. And again, they can't go out and borrow $2 billion against their $8 billion of Bitcoin, really anywhere. But they can borrow $2 billion against their $8 billion position in Gemini. And I think that's really the answer.
Yeah, well, and then you take that liquidity and you just buy more market share. And then and that's why that consolidation that you were talking about in the markets happens, because everybody just gets richer. It's like Monopoly. At the end of the game, there's only one player. He buys everything. That's how it works, and that's why we have anti-monopoly clauses and antitrust clauses and all of the things that are supposed to keep that from happening.
No, not everybody can be a Chris Inks where he owns every house on his block. Right? Nobody can be that guy. He's he sits there and he's fairly unassuming. He still uses certain types of mowers and lawn guys and stuff to keep a low profile. But the truth is he owns the whole block, right?
It is what it is. Let's go real quick here. Tillman, you brought it up before, that interesting point about, companies basically creating their own tokens for their own ecosystems and whatnot. But, that I think that kind of begs the question here. So the reason we went to things like gold and then, we went to the dollar was because it means that you only have to really work within generally one medium of exchange, right? So I see everybody excited in doing that, but I don't know, man. Do you think that's something like just like a short-term thing and then everybody gets burned out?
No, I see it in the future. Yeah, listen, it makes everything so much easier. And let's say Disney wants to do a collaboration with another company. They can do a smart contract and distribute. They don't have to have anybody manage a joint bank account. It just makes business so much easier. And if you look at like actors, actresses, musicians, all of those intellectual property rights, they're ungoverned right now by technology. They're governed by paper, but they're technology. So you have a system that's built in the cyber world being governed by a mechanism built in the physical world. That's a bad lineup. You want the enforcement to be at the level of the technology. So smart contracts are going to be the future for all distribution of payments and contract management of funds, because you don't need lawyers, you don't need to have the worry of post distribution fraud and distribution delays, lost distributions. Like, I can think of so many industries this applies to, but the one that's nearest and dearest to my heart is the oil and gas industry. Do you know that in Texas, that if you are owed 1 cent by a operator and they have your money, they are financially obligated to find you and keep sending these checks out to oblivion, and they just keep coming back and they keep sending. It's the biggest waste of human resources that you can possibly imagine, and it's tens of thousands of people and checks every month just going to nowhere. And these people are either dead, they're moved to another house, and it's just this huge mess because the people who are issuing the checks have a fiduciary obligation for eternity. Yeah. And so they have to, in good measure, do their best to try to get that payment in the rightful hands of the owner. Well, smart contracts immediately take all of that problem away instantly, and you don't have to have any of the waste of cost. You don't have to have any of the human beings that are running that, and that's one industry that most people have never even thought of before. Think about all this,
right? I mean, that would just be one smart. You could say, okay, Ethereum, right? That does it, and everybody just uses Ethereum. But I was talking more toward the idea of each company, like Disney, having its own token, or each.
No, I'm talking about like a group like. Let's just say, Hill Corp in Texas. You're familiar with Hill Corp, right?
Yeah.
I don't know how big the company is, but it's 100 billion plus.
Right.
They have this problem at a scale that the three of us can't get our brains around if we spent all day thinking about it. Tens of thousands of employees, it's just the biggest machine you can possibly imagine. That type of a company buying a Cardano makes all the sense in the world, and they could do a hostile takeover just by going in and being the market maker and just buying and I don't care how much money you spent. Cardano is probably not a good value. I'd go way down further on the list. But these technologies are the same. They've been blueprinted. They're all open source in the most part. So you're getting the same technology. So you can go into a very small dev team that's done a decent job of getting a coin off the ground, and you can essentially buy that coin or partner with that company and take it over and then implement it within your ecosystem, and you pay for it in a month because of the efficiency change that you're able to acquire, right? So that's going to happen everywhere. That is blockchain's efficiency delta that people can't ignore because it provides such a competitive advantage that you lose market share without it. That's the way it's going to work.
I just saw a note here. Let's see. Bullish shares indicated to open between $85 and $88 in the NYSE debut. Let me see what it say. Versus $37 IPO price.
There's your answer right there. What's more attractive to you? What gets more money in the door?
That's crazy. But I mean, it's following, what was it? Circle, right? Circle came out. They were looking like 28, 29, and immediately we're already over $100, jumping into it. So, I mean, a lot of opportunity here, I guess, if people are, especially those getting in early, before the IPO, a lot of ridiculous upside for these companies coming in. But I like the idea what Andrew was saying, which is, hey, M&A activity really kind of kicking up next year, which kind of pops the bubble of people who believe that, these markets are going to top out here Q4 of this year. And I'm actually, believe it or not, I'm actually leaning a lot toward the same idea as Andrew has there, where we have this extension into next year. I haven't actually put out my paper yet, but still working on it. But with Bitcoin and whatnot coming up, where it becomes this more of a not the usual 4-year cycle that we have, where it extends beyond that.
If you think that it's ending in Q4, you're ignoring the Category 5 hurricane that's in the Gulf. Because the Category 5 hurricane that's in the Gulf is that we're going to see consecutive rate cuts. And the Category 5 hurricane in the Gulf is that we're going to see a lot of money printing. And those two things combined, you can, I mean, I can't envision a lower watermark in terms of, I just can't put those two things in a recipe and come up with a lower watermark. To me, all things float up, everything. I think every commodity, every product, every service, everything goes up, and it goes up quick enough to where there's a play to be had.
Yeah, that melt up's still coming there. But I think, God, and I just look at it on social media and all the posts there about, people are being conditioned into this idea that top is going to be here, coming up here in the next couple of months. And I think, honestly, we've been through enough, market cycles, the three of us, whether it's Bitcoin or otherwise, crypto or otherwise, where, this doesn't end well for a lot of people. Usually they've been conditioned, and now it's happening on such an in-your-face kind of level, right? I mean, social media is so big now. And so what happens? So they don't get in, right? They exit, and then it keeps going up, and then they freak out about it going up, and they kind of sit there, they're like, and they're, it's that whole emotional thing back and forth as it continues to go up. I want to get in, I should get in, but now it's probably the top. Oh, look, it's pulling back now. So yeah, thank God. And then it pops up higher. They're like, oh, crud, I got to get in, but I can't. And then when they finally get in, usually that's going to be around the actual top. And then they hold as it drops down. They end up losing a ton of money. But, when we're thinking about this, we notice that was an article out here that mentioned that institutional volume on Coinbase hit the 75%. So 75% of that volume that's happening on Coinbase for Bitcoin has now hit 75%. So take that, retail traders.
It's a pretty simple, if you listen to anybody that's been involved in Bitcoin for 5, 7, 8 years, whatever it happens to be, I dare you to just buy Bitcoin right now and keep buying it as often as you can for the next 3 years. And I dare you to figure out if it's going to be lower than it is today. No chance. Absolutely no chance. So buying this, but 3 years from now. So buying the tops of every previous cycle has been a recipe for success over a meaningful period of time. Just
don't say that. That makes me cringe. Listen, you cannot say listen,
but it's also just the truth.
Here's the thing: across any time cycle, it's all about timing. like time frame that you are measuring in, right? And I would agree with you that Bitcoin, because of its intrinsic value and how early we are in adoption, that you can't miss over the long period. That doesn't mean in reality, though, that the normal person who buys the top doesn't puke it up at the bottom
Yeah.
and lose a bunch of money because they're not psychologically prepared for, some of the previous pullbacks that we've had. And so the psychology of it is important, right? And so that's why the DCAing, if you're not a trader and you're an investor that wants to get into Bitcoin, you don't know what is a good price because no one does. If you knew what the absolute fair market value of Bitcoin was, then you would be able to predict the future with absolute certainty, and you would be off on an island that you purchased. It's all speculation. So how do you address that speculative issue? How do you address the volatility coupled with the speculative risk? Well, you put small amounts of money in over long periods of time. That's the truth. And so then you have to go, okay, well, what's the best way to achieve in the shorter term a clear decision point as to when I put money to work? Well, you buy the dips, and you don't worry about whether that's the final dip or not. You bought a good dip. If it dips again, buy another dip. And if you run out of money, you didn't buy small enough in those dips. And if you do that with Bitcoin, you don't have to time the tops. You don't have to time the bottoms. You're going to get a very healthy curve, and you're going to find yourself in a very good position, just like Andrew said, but in my argument, doing it that way, you don't even have to wait 3 years. You're going to be in a good position in about 1 year. Like there is, if you do a healthy cost curve over a 12-month cycle, there isn't another 12-month cycle that you're down.
Yeah. So I put out a post a couple days ago. And I thought this through up until then, and I don't know, just kind of struck me because I saw, and it's probably a little bit more than this now, but currently Saylor is up $30 billion on his Bitcoin position. Okay, 30 billion. And then I took a look at some of the most successful and well-known money guys, hedge fund guys in the world. Carl Icahn, Soros,
Yeah.
Bill Ackman, all those guys. Their most famous trades, Dan Loeb made them, the Soros's most famous trade where he broke the British pound. He made $1 billion. Now, to be fair, that was back in the late 80s or whatever it was. So the difference in inflation.
Yeah.
Maybe that's $10 billion trade.
I would put that on par, honestly. Listen, when you break a market, you get all the money on the board. That's pretty good.
But my point is that these guys are held up as paragons of unquestionable finance, and their best trades don't even get close from a monetary value of what Saylor's done, and it's striking, honestly.
I think there's a difference, though. The difference is that their trades got them back to the ground, and in a lot of people's mind, Saylor's still out on the limb. Like the story isn't told yet with Saylor, whereas those guys' trades, they were done. They made the money. It was the trade.
I don't know. Bitcoin could get cut in half, and his trade's still worth $15 billion. The point I was making in the post is that the work that he's doing now, even if he were to cut it off because Bitcoin got chopped in half, and he said, I don't feel I'm done. I want to go live on an island somewhere, and everybody leave me alone. It'd still be exponentially larger than Dan Loeb's and Bill Ackman's and Carl Icahn's of the world. I mean, Carl Icahn is seen. They've made movies about the guy. Right, like he famously tried to take over an airplane outfit, and it blew up in his face. But he's done trades like the Netflix trade or the Apple trade, made a couple $1 billion each time. But a couple $1 billion each time means that if he calls into CNBC, they immediately put him on TV and they let him say whatever he wants, right? Because he's quote unquote Carl Icahn, and Saylor has done. In other words, I've been somewhat skeptical of Saylor and where he's headed with all of this for a while. And then I did a little bit of that research, and I'm like, Man, okay. Well, maybe I need to adjust how I'm thinking about this. It's $30 billion is an extraordinary number. And all of us on this call think that Bitcoin's going to 300 plus K. That 30 billion begins to move north and up and to the right very quickly, right?
You can call it a trade. I look at it as an equity value increase. And there's plenty of $30 billion equity value increases. Those happen all the time with mergers and acquisitions. Like I agree with you that Saylor is a captain of industry. I agree with you that Saylor is um, doing things that are breaking borders down in the financial space. My hat's off to him. I'm a believer. I would bet on him. I think he's the lead horse, and I think he's like so far in the lead that even if he like stumbles and falls 10 times, he still won't get caught by the horses behind him. And so I am 100% in the camp of being a Michael Saylor believer. But I also, I temper that with the fact that I've heard him speak enough to know that a lot of it was out of desperation and luck. And I don't think that's the case with those other guys. So that's just my stance. I could be wrong, but that's the way I kind of look at it.
Well, we can definitely look. I mean, I think we can all at least agree on the fact that Saylor was probably one of the most hated back at the end of the last bear market, and everybody couldn't wait till he hit the magical number that was just going to ruin him, and he's going to have to call that Bitcoin that he had back then in. And here we are just a few years later, and he's like the darling of the ball here. So,
well, the thing that I think has been most impressive to me about him is his ability to raise capital. I mean, good God, the guy is just a machine.
Yeah, I don't know how it all ends up, but there's no doubt it's a generational run right now.
100%. I couldn't agree more. Yeah, I mean, this is royal flush after royal flush after royal flush. It's against all odds.
See, that was the thing I said when I came into Bitcoin, like fully in January of 2017. I made a few posts that probably they should still be out. They haven't erased anything on X, but I had mentioned, man, I've been doing this for a while and I've seen a lot of great plays, but Bitcoin appears to be like that once in a generation, once in 100+ years kind of thing that you get into. And so far, I mean, that was when Bitcoin was about $1,100. And so we've done pretty good since then, but absolutely. And every year that goes by, even with the bear markets that come in, it just continues to make me feel even stronger about that. And, and then other people are going to come in now, and they maybe even sit on the sidelines and they'll say, oh, I'm too late. I can't make any money with Bitcoin. And what would you guys say to that?
I'd say it's all proportionate to the risk you're taking. If you're trying to make $1 billion in Bitcoin, you better have a pretty good amount of money right now, maybe 100 million. I think there's a 10x left in Bitcoin. I really do believe that. If you're trying to hit 100x, I don't think, maybe there's 100x in my lifetime. I don't know, but it's all again relative to the risk you're willing to take and the amount of capital you have. If I was sitting back, I found Bitcoin very early, 2013, but I was a newlywed with 4 kids and a lot of stuff, and I didn't have the means to latch into it like Michael Saylor did when he found it. He found it way later than me, but he had a ton of money to put into it when he found it. And so, he took an extraordinary risk is my point. Whereas I didn't, because I couldn't. And so, you get what you deserve as it pertains to risk reward. And those things, we can try to convince ourselves that they don't exist, or we found a secret key that gets us a lot of reward without incurring a lot of risk. It doesn't exist, in my opinion. Those are the too good to be true type opportunities.
Yeah, there's 2 answers to the question, Chris. The first answer is Satoshi's answer. You either get it or you don't. I don't have time to explain it to you. And then the other answer is, there is going to be enormous opportunity associated with just volatility. You can use the volatility. Take a look at SUI and Solana over the past 24 hours, the last week. the volatility associated with those tokens and the ability to harvest volatility and turn that into additional Bitcoin holdings, that's where the opportunity is going to be. As an example, Bitcoin treasury companies, right? So over the past 2 weeks, probably the most well-known move is Jeff Park going from Bitwise to effectively run the investments of a large Bitcoin treasury company with Anthony Pompliano. I wouldn't bet against Jeff and his ability to execute strategies that just beyond raising debt to buy more Bitcoin is going to be a part of their narrative, that he's going to find ways to harvest some sort of additional capital and yield that turns into more Bitcoin, or certainly, harvest yield associated with just the structures that exist now around Bitcoin, options, swaps, debt at some point. All of that stuff is going to be, kind of at his fingertips, and he'll have the opportunity to kind of prove his mettle, put his money where his mouth is, and we'll see where that goes. But harvesting, volatility in markets is often where the biggest payoff comes. Again, like a Soros type of a trade, breaking the pound, that in and of itself, that was a trade, that was a bet, that was an assumption, and a lot of moves had to be made to get to that point. So, 10x plus, certainly, if you're using the totality of this emerging asset class in the way that it can be potentially used, for sure.
And we could see crazy stuff. I mean, the world's accelerating at a pace that is hard to predict, honestly. I think we've talked about this on the show a lot. We've predicted a lot of things right, but boy, did we get it wrong on the timeline. I mean, the things just go ridiculously fast these days. I mean, it's just like you can't keep up. So, could we do 100x? I mean, now that I even say it, I'm sitting here thinking, where would I think by the time I die a fair price of Bitcoin would be? I do think that's probably north of $8 million. I really believe that, as it pertains to continued inflation, continued global macro banking perforation, and adoption, and getting the unbanked banked, and their participation in global market. Like, there's a lot. AI and what that's going to mean for us, and there's just a lot of growth in the near future, and Bitcoin is that perfect indicator. You can't hide the growth. It goes proportionate to the growth in terms of price.
There you go. And just for anybody who's wondering why I was mentioning the idea of or what's going on with the institutional volume there at Coinbase being 75%, it's because historically, when it's hit that level, Bitcoin price has been higher a week later. So if you're looking for a new all-time high, I don't think we actually needed that to say it was going to happen, but yet another indicator that people kind of look at saying, yeah, probably going to be.
I don't think anybody's even to talk about it. I don't even think, I think it's the quietest bull run I've ever been a part of. I mean, seriously, it's insane. We've doubled in price in a year. We have just all of the good news that you could ever want to hear in the industry, from an adoption, institutional, sovereign nation, user, retail user base. Everything is positive. And yet, people are kind of bored with the price. So, maybe we start talking about it over 150. I don't know. Maybe it takes 200.
Yeah, Bitcoin is now a, traditional markets asset. That's just the truth. It has, it still retains the, cypherpunk qualities, because you can buy it and hold it in cold storage and do all the things that you can do with the cold storage process. But the way that it's going to act is going to follow certain, traditional market cycles. We're coming out again of sell in May and go away. We're coming into the last portions of the third quarter. Over the next 45 days, we're going to see a continued ramp up in Bitcoin ETF inflows, because asset managers are going to be playing catch up so that when they have their Q3 meeting with their most important clients, they can say, yes, I promise we do have, some level of exposure to Bitcoin. See, look here, this is our exposure to Bitcoin, right? So they're going to play catch up, and that's going to mean that there's going to be additional dollars that flow in, which is why you're seeing that move in Coinbase institutional volume. I guarantee you it has to do with we're getting closer to the end of Q3. And so action has to be taken. And who is the custodian of choice on all of the Bitcoin ETFs? It is Coinbase, 8 out of 11.
Well, who's the smartest money? Follow the big money, and you always are right. And big money wants to get, they have so much money, they have to get in over long periods of time. They don't have the choice.
We're going to see it continue to, float higher. We'll see. In my mind, through the fall, we're going to see higher prices. There'll be a slowdown, associated with Thanksgiving through the end of the year, because again, that's what the slowdown looks like on Wall Street. Volumes will slow down, but then in the first of the year, there's going to be another move, really, really strong move. So we'll see where it goes. What does this cycle look like versus others? Nothing goes straight up for forever. That's certainly true. But
let me ask you a question. I got an interesting one before we leave.
Mm-hmm.
If lending comes online for Bitcoin,
mm-hmm.
doesn't that materially change the cycle rate?
It materially changes it, but it also probably somewhat mutes, the upward movement as well, right? It's
why you say that?
Because it's going to flatten out the quote unquote curve, right? Lending isn't going to love Bitcoin volatility to the upside or to the downside, right? It's no different than the price of oil.
Oh,
right?
You're saying they'll artificially, they'll turn it one more notch from a volatility perspective. Yeah. I don't disagree with that. I think the volatility knob is going to continue to get turned down. And like we've talked about, the derivative assets will be where you get the action.
So I watched the show Landman. I thought it was really good. A little rough around the edges at times, but Billy Bob Thornton's character was really, really good. And he had some commentary about the oil market. Basically said, from about 65 to 80. Is where oil companies want the price of a barrel of oil. Why? Because they can make money with it. It's stable. And then on top of that, you get above 80, things start to get a little bit ugly at the pump and people use less. So now we're pushing out fewer barrels because people are buying less gas because gas gets too expensive. And if you go down to 50, 40 and under, well, now it's not profitable to bring it out of the ground, right? So it's got to stay in that space. You know what I mean?
Utility though, and consumption of the oil, that's a consumable item, whereas Bitcoin never gets consumed. So to me, I don't think the analogy applies. I think it would be I think the derivatives are where it's just going to be, you're going to be playing watered down versions of Bitcoin eventually.
By the way, I just noticed somebody said, speaking of Coinbase, Arch Public plus Coinbase has a nice ring to it. We need those algos. So good news, our Coinbase beta is now available. If you want to use our algos on Coinbase, you can. Get in touch with us and we'll be happy to help you make that happen.
And we also have a new strategy that will be being announced here very soon that instead of being percentage dependent, it's price dependent. So it's pretty exciting, and it adds another layer to the existing strategies in a very nice fashion. So
is that strategy for Bitcoin or?
It's for all of them.
Okay. Yeah. Very cool. Very cool. Yeah, you guys, you have a special going on now or something, don't you, Andrew?
Yeah, so we've got a Dog Days of Summer thing. We've never done discounts before, but here in August, Dog Days of Summer, we've reduced our concierge program levels by 40% across the board. So if you've ever considered getting into our concierge program and all the service and communication and access and setup and all those things that are available to you at that, inside of that program. You have a window of opportunity over the next 2 weeks to get in at a 40% discount. It's extraordinary. We're dealing with an enormous amount of inbound opportunity folks that see this as a great opportunity. So reach out to us. Love to talk to you and offer you that discount here in August.
There you go, guys. And as well, I think we've still got a few spaces left with our annual liquidity cartography program. Jump in there. Use the code TWOX 2X. Get in there. You get the year for half price, and we've got a 2X money back guarantee on that. So you can jump over to members.texaswestcapital.com to check that out. And you've got nothing to lose. I mean, you either get better, you get twice your money back. It's better than inflation. And of course, you can jump on with these guys here as well and jump on with those algos and whatnot that are going on there. So a lot of opportunity for you guys out there. I just think there's really no excuse for you not, if you're serious about getting involved in the markets. I mean, I don't think there's a lot of reason for you, for you to say, oh, no, or whatever. You come up with some excuse. If you're willing to do it, both of our companies got ways to get you guys there. So jump on in. We all have beards, so that's good. Andrew is the beard, as he says, in Beards and Bitcoin. Tillman Holloway is the CEO of Tillman Holloway, and I'm just this guy over here, Texas West Capital, doing my thing. So,
Jojo, the bull is 2022 Bitcoin conference was in Miami, and they wanted to do a commemorative bull in kind of 21st century compared to the one in Wall Street up in New York, and they produced that with TradeStation did it, and we have our algos on TradeStation as well on the futures side, and so we partnered with them and actually helped have a big launch in that year. So they were kind enough to send me I can't remember what that company's called, Infinite Displays or something, but it's an NFT, and that's the display for it. So yeah, appreciate you commenting on it. It was a fun time.
Yeah, I had forgotten about that until you just mentioned it there. You were like, oh yeah, back then. I'm like, oh, I remember the big thing. It was all over crypto Twitter when they did. It was pretty cool. So anyway, man, as always, guys, really appreciate you joining in. Like I said, guys, make sure you're following these guys. Andrew, you can follow them at AP_abacus. An abacus is an old-timey math machine, okay? Before digital math machines, all right? So,
I thought it was a character from Transformers. That's what I thought.
No, it's abacus. It's a Chinese calculator. And Tillman knows this. I am known for math. That is something that I'm known for, and that's why I carry the app.
Tillman's laughing way too much for the moment you said you're known for math to make everybody believe that.
Listen, Andrew has an intimate relationship with words. He does not have an intimate relationship with numbers.
That's why he's got you, right? That's why he's got you. By the way, don't follow Tillman at Texas OL 61. Okay, he doesn't want a big following. I think he's gonna, feel bad about himself if he has a big following. So don't follow him.
Yeah, listen, if you're a positive person, I'm fine. But I know what comes along with a big following on X, and it's not a bunch of positivity. Yeah, it's a lot of hope.
Andrew likes dealing with it. The rest of us,
Andrew's the Pied Piper of it. He actually is the antagonist in the story half the time. So you get what you give.
So be warned if you're following Andrew, guys.
I enjoy being marginally mean to people. I mean,
that's what I'm saying.
Right? I'm happy.
Andrew has no problem calling people idiots in the chats.
He doesn't even stutter when it comes out, huh?
No, he does not.
All right. Well, there it is, guys. We started with some laughs. We ended with some laughs and a lot of great information. I really think so in between there. Like Tillman said, we've really kind of a lot of things that are happening now. We've talked about over last year were going to happen, but damn, we missed the timeline on a lot of them. That just things are just.
We're 4 years from where we. It's been fast forwarded like exponentially in my opinion. It's insane.
So don't get out too soon, guys. Enjoy the ride. As always, remember the only thing you control is how much you lose. Please keep working on that risk management.
I still completely disagree with that statement.
I know you
I
do.
control a lot more than what I lose on a daily basis. I really do. I mean, I really do.
You
But
think so?
it works for you. I get it. I understand.
Listen, you sound like an accountant. What about top line growth? What about that? Why are we focused on what we can lose when we can focus on what we can make?
Why? Here's why. Here's exactly why. Especially for new traders, the trades that they lose have an exponentially greater negative effect on their capital account than the few
Chris,
trades
going
they
broke
make
a few
constantly.
times is what gets you from going
Chris,
broke to not going broke.
Didn't you write a book for new traders? It's called You're Forked. Isn't that your book for new traders?
No, but I'm about to now. Now I'm about to. That's a great idea. All right. We have lots of fun here, guys. Hopefully y'all have a lot of fun following along with us as well. We'll be back next Wednesday, so be sure to check it in. I'll be back Friday on the Market Breakdown Show. Fibo, it does not look like he's going to be able to be there with me this Friday, but he's still going to try. If not, we'll try for next Friday with that. So y'all take care out of there. Trade safe. Enjoy the ride up and stop saying the top is in. Just stop.
And remember, guys, the only thing you can control is how much you make.
You wish you could. You wish you could. All right. Y'all take care. We'll see you next week. Thanks, guys.